Hello, good evening, everyone, traders and investors. This is Alex from MarketWise Asia. Thank you for tuning in for this Facebook Live and also on the YouTube streaming as well. So as usual, today it is the 24th of February 2023. As usual, a Friday evening. So if you guys can hear me loud and clear, please say a hi to me in the comments or in the chat box, both on the Facebook and also on the YouTube stream as well. So I'm friendly, so give me a like, share, or comment. I won't bite, okay? So let me take a look at the comments right now. Just say a hi to me in the comments, okay? Say a hi to me, give me a like, share, or comment, okay? If you really, I really appreciate that if you can give me a share as well, okay? So just tell people that there's this gentleman at MarketWise Asia, Alex, to give away his free out of the market, some good content of trading, investing, etc. Okay, so let me take a look at comments. Okay, hi Pauline, Stephen, Amanda, Dave, JT, Wei Lun, Team, CA, Wintan, Jolene, Bello, okay, SC, SJ, all right, Mary, Hadley, Tommy, William, Kok Leong, Cal, Mark, all right, Yu Yang, okay, Senpai, yeah, not Senpai lah, okay, Roy, Dominic, CJ, Poking, David, Christopher, Ben, all right, Banmi, Abdurraf, okay, Brian, Paywan, okay, so market is actually as of I'm doing right now, the market is crashing right now, crashing. The Nasdaq is down minus 2%, S&P is down 1.64%, the Dow futures is down 1.5%. Are you guys scared or not? Okay, are you guys scared or not? If you are worried, you are scared, just let me know. Okay, if you are scared, okay. All right, so let me see. If you're scared, just type in the comment, just type scared, okay? Or if you think the market is going to be turning into a bear market again, just type bear in the comments, okay? Or if you think that it's still a bull market, all right, just tell me bull in the comments, okay? We are just starting. So let's wait for a few more minutes before we kickstart this sharing session, okay? So right now we have 126 people in the room combined both on YouTube and also on Facebook. There'll be more people that'll be streaming in. Okay. I think today evening there is a gathering session for Jay Tun for and his graduates. So I don't know whether how many of you are still in time to watch my Facebook Live. All right. So anyway, so maybe tonight people lesser because all attending his Jay's live physical session. So I don't know who'll be in time to me to watch this session with me. All right. So let me take a look at the comment. Fed up actually. Fed up actually. Well, interesting. Happy bull bear, boss drop, short term bear, bull bear. So it is still quite mixed. Okay, and anyway, I think there are more people streaming in, right? So let's keep this interactive. Within the next 2 weeks or so, do you think the market is going to come down even further? Do you think that the breakdown is going to be more severe for the next 2 weeks? For the next 2 weeks, if you think that the market is come down within the next 1 or 2 weeks or so, even more severe, just type bear in the comments. If you think that no, we are going to make a U-turn soon. Market is going to be a bull market again soon. As it's going to turn up again soon. Just type bull in the comments. Some water. Okay, so without further ado, all attending, no people, no wonder market drop. Okay, so let me see the comments right now. Okay, still some bull, bear. Okay. So let me interesting. Okay, anyway, it's still mixed lah. So let me go through the screen right now. So as usual, first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Alex could be wrong, so please do your own due diligence. Okay. So as mentioned, I have this Telegram channel, YouTube channel, and also Twitter as well. So remember to subscribe to all the various channels if you could. Okay, if you could. All right. So as I mentioned last week, okay, Telegram, YouTube, Twitter, all different kind of content. Telegram is more for price mover, breaking news, etc. Of course, some of the sharing I also do share on Telegram. YouTube, of course, I do the simultaneous broadcast on YouTube and Facebook as well. Of course, sometimes if I do have additional content, I will also post on YouTube as well. Twitter, more of our trade ideas, okay, more of my renting, some of the things that like I share more charts, more chartings, okay, more trade ideas on Twitter. Okay, so for example, right, for example over here, so let me just share a few like recently, I think not, okay, so I share that S&P 500, could now at central pivot range could have a potential support. Okay, watch and risk could be in play. Okay, market do bounce a little bit, but just that little bit, and market come down again. All right. So I talk about the some of the trades I did that I did the FBMT, managed to exit. Later I'll go through some of them later. Okay. All right. Copper I mentioned that previously. So it actually went up. Okay. So exited as well, but after that, heng, okay, exited, then it come down again. So some of the trade ideas I do share as well. All right, so I'll share with you. So do subscribe to the various channel as well. Let me post the link once again in the comments. All right, so of course, okay, just now the breaking news is actually, let me share this screen, okay. The breaking news is actually the PCE inflation data over here. So okay, let me go through the screen over here. Okay, so the actual is 4.7% year on year. Okay, the expectation is actually 4.3%. Previously is 4.4%. All right, so what is the difference, okay, between the PCE and the CPI data? So, okay, I managed to find some information for you guys. Personally, okay, to be completely honest with you guys, I'm also not exactly what's the main difference. Okay, I know it's inflation data and such, okay, consumer expenditure, etc. But the main difference, okay, I will leave it to this side to share with you guys. Okay, so PCE versus CPI. So this is from the Bureau of Labor Statistics over here. I'll post the content. I'll post the link in the comments over here. So the difference between the PCE and the CPI. All right, so the words can be a little bit small, okay, but not important. All right, so the key thing is, okay, CPI sources data from consumer, while PCE, okay, PCE stand for Personal Consumption Expenditure Price Index, while the PCE sources from businesses. Okay, so of course there'll be some difference, like different methodology produce different estimate, can be grouped into 4: effect, weight, formula, scope, and others. So all in all, I think don't have to, if you really want to know more, then of course you go and read more. But nevertheless, basically this news is basically telling you that inflation, okay, is up a little bit more than what is expected, still hovering at about that 4%, 5%, which the Fed wanted to bring down to 2-3%. So the market expectation is that it will continue to go down all the way. Of course, this news give the market a chance to sell down even more, All right, so so this is the PCE. So the information, it is all in this link over here. So main key difference, CPI sources data from consumers, or PCE sources from businesses. All right, so everything's okay. All right, go and read it yourself. Just type PCE in the comments. Okay, do engage with me. Right now I have about 200 people in the room, combining from Facebook and also YouTube as well. All right. Of course, I think on the 22nd, just a few days ago, right, there was this FOMC meeting. All right, the FOMC meeting, the Fed members are actually still pretty hawkish. They are still intending to increase the interest rate. So this is the from Forex Live over here. So the FOMC meetings, right? Okay, that's what I mentioned, right? A few members actually favor raising rates by 50 basis point. Okay, so in fact, all the participants favor a 25 basis point. 25 basis points means 0.25%. Okay, a few actually favor 50 basis point. And because of this hawkish stand, right? Hawkish stand, okay, and comments, right? The kind of changed the probability of the next FOMC meeting rate increment, okay, the probability. So this is the link that I always go. All right, I mentioned this a lot of time already, so you can go to this link. This is from the CME Fed Watch tool. Nothing new also. So we have about 26 days to go, about 1 month time. That it is that is on the it is loading. Okay, so on the 22nd of March over here. So do you remember last week I actually mentioned that this probability of raising to the 50 basis point, okay, it is actually 18% last week. Now it's increasing to about 30%. Now it's increasing to 30%. Okay, of course, the 25 basis point is like guaranteed already. It's just a matter of how much. Okay, either a 25, okay, basis point or a 50 basis point, BPS, not percentage, BPS. So either a 25 or a 50. So now increased to 30%. So you can see the change over here, right? Last week, try to zoom in. Right, last week was actually 18%, now become 30% already. So there's a chance that come 22nd of March, okay, there will be a 50 basis point. So if you understand what I'm trying to say again, right, just type 50 in the comments. Once again, nothing new over here. This is basically just a recap of what's happening for the past week. Of course, the Fed meeting, and of course today the PCE inflation data that has come out. Okay, nothing new. This is just a recap only. All right. So I'll go through some of things that agenda for today. I'll go through the indices and the equal weight indices as well. So I'll put things in perspective. Some of you are still bull, some are still bear, and of course, for the recently, of course, today the market actually came down a lot. That might make a little bit more scary for some traders and newbie. Okay, and of course, my own trade. All right, I'm actually pretty relaxed because as I mentioned since last week, right, I say that January as in February is actually historically a bearish month over here. Historically a bearish month. So I do have a lot of trades. Actually, last week I only mentioned about 2 trades, right? So I'll share with you. It is a normal pullback. Okay, I have to see things in context. Okay, the market breadth, the volume profile, whether there's a star signal, a reversal star signal that's coming out, and of course, I think team actually requested whether I can go through about Hang Seng, China stocks. Okay, so I will go through that. Okay, so let's go through one by one. Okay, maybe I'll talk about my own trades. Okay, I remember I mean that you can go through. All right. So last week I talked about I entered FBMT and also VIT, Vital Farm over here. Okay, so let's go through how are they. Even though the market is down, let me see VIT out here. So let's go through over that. Okay, so very luckily, okay, I managed to exit FBMT. Okay, right. This is the 4D molecular therapeutic, right? So I mentioned that. So I actually entered here, okay, this green bar over here, okay, and hang I exit at, okay, somewhere near the top, okay. Then you say, hey Alex, you must be kidding, how sell or not, okay? It is no, just my whole power only. In case you don't believe me, all right, let me just share with you this screenshot over here. Okay, so yeah, so I exited FDMT at 21.74. That's 3 days ago over here. All right, 3 days ago. All right, so FDMT 21.74. So to put things in perspective, all right, 21.74. Okay, it is somewhere exactly near the high over here. Actually, it's pretty near the high. The high was 21.79. So I exited at 21.74. Okay. So if you add in the cloud and the indicator and such, okay, somewhere near the cloud resistance over here. Okay. All right. The reason why I exit, very simple. Okay. I think I mentioned before previously, right? Okay. There's 1.5 R profit. Okay, I will take. So which means that if I risk $100, okay, if I risk $100, my profit $150, okay, I will exit. All right, so if I profit 150块, okay, then I will exit. So actually for this FBMT 4D molecular, I actually hit 150 as in risk to reward 1.5R, okay, 150, okay, so I exit, right? So can you understand that? So that's the reason why I exit. So I have no idea the market is going to come down. That's the reason why, okay, I mentioned previously, I like to use 1.5R, okay. So of course, I know there are people who say that, oh, risk to reward 1:2 or 1:3, 1:2.5, that kind of, okay. For personally, based on my experience, okay, 1:2 a bit difficult to hit, okay. 1.5 actually quite okay to hit one, can hit one, okay, 1.5. So I use 1.5, and yeah, so of course, not always the chance that I can hit 1.5. Sometimes I have to see the market context. Sometimes one R I will take, 1.2R I also will take one. All right, Ken. So the other one that I'm holding right now is actually VITL. So I'm still holding Vital Farm. It's a small cap. Yeah, I'm still holding. Okay. My stop is somewhere below the low over here, so I'm still pretty okay. So in fact today, pretty strong. Vital Farms is actually positive when the rest of the market is negative, 0.32% up. It is still up 0.32. So I'm still holding it. Yeah. So these are the only two stocks that I'm holding. Okay. All right. So okay, so let's go to the indices right now. So I hope I clear on this. So in case, hey Alex, you know how my trade doing? FBMT I exited. Okay, so that's the reason why I actually mentioned on Twitter. There's, I think it's Tim. Tim actually is asking me. Okay, I say that don't chase. So if you are not inside, okay, don't chase. Okay, I think there's one I think asking. Like, should I enter or should I not enter? So I don't chase. Okay, can. So that's the reason why you should subscribe, as in follow me on Twitter. So for those who just join me, these are our usual social media: Telegram, YouTube, and Twitter. So do follow me. Okay. Cover this. Okay, let's put things in perspective. Okay, let's go to indices right now. Of course, when the market is coming down hard like this, the Nasdaq is coming down 2%, S&P is coming down like 1.65%. Okay, how is the market doing? Are you guys still feeling scared? Or some of you are turning bearish once again? Okay, so all right, so I want to put things in perspective. Okay, so looking at the indices, okay, the indices and the equal weight index, they are still all above the 200 days moving average. So as a rule of thumb, from what you know, textbook, okay, from the knowledge that you have, all right, above 200 days moving average, is this still a bull or is this still a bear? Okay, just let me know your answer in the comments. From what you know, okay, textbook or whatever it is, from all the knowledge that you have, okay, generally when the market it is above the 200 days moving average, is it a bull or a bear? Just type bull or bear in the comments. So PL Lee is asking, yes, I do post different things in Twitter. So I mentioned Twitter is more for trade ideas, okay, and some interesting things that I know. Telegram, I also share, but generally price mover, market updates, and also breaking news, etc. Okay, Ken? So yeah, so it is based on what you know, right? So 200 days, it is still the bull market, right? So, okay, so let's go into that once again. So the moving average. So I remove the rest of the other lines over here. Oops. Okay, generally my cough actually is gone. Just that somehow when I talk a little bit louder, now my cough is back again. Okay, so I remove the cloud over here. All right, so this is S&P 500. I should talk lesser. I should talk lesser. Okay. Anyway, yeah. So this is S&P 500. Okay. All right. So as of yesterday, all right, we are above the 200 days moving average. But right now, of course, is this. Okay. we are below the 200 days moving average. Okay, the Nasdaq, today we are below the 200 days moving average. So like quite crucial for today. The Dow is the strongest one. Okay, we are still hovering at the 200 days moving average. Okay, all right. So, but of course, I think I mentioned before, right? So, because if you only look at the main indices, the Dow, the S&P, and the Nasdaq, basically you are just looking at the very big companies, because the biggest company like Amazon, Google, Tesla, all these they carry a lot of weight on the indices. Okay, all right. Nothing new over here. I mentioned before, so I just go to this snake chart again, which I mentioned before. So for those who have been with me for some time, you should know about this slide, this site. Okay, so the S&P components performance over here. Again, just a recap. Not this one. Is the weight analysis. It is not loading over here. Okay, so can you see over here, the top 50 company has already more than 53% of the total weightage of the S&P 500. So it carries a lot of weight over here. And if you look at the S&P 500 companies over here, okay, so Apple, Microsoft, Amazon, Nvidia, Berkshire, Alphabet, all this carries a lot of weight. So they are down means that all the rest are down, whereas the rest of the bottom 500, right? You see the weight they carry, not even 0.1%, 0.006%, that kind. Okay, 0.01%, 0.009%. So they carry a lot of weightage. So that's the reason I have to look at the equal weight, where all the companies are divided equally. Okay, so for example, RSP, right? We are still above the 200. We are still above the 200 days moving average over here. Okay, so taking into account of the smaller company, even though they are still big, okay, but compared to the mega cap, they are smaller, so still above 200. Nasdaq equal weight, we are still above the 200. Okay, we are still above the 200 days moving average over here. Okay, and mid cap over here, mid cap ETF, we are still above the 200 days moving average. All right. Small cap IGR, we are still above the 200 days moving average. All right. And then the equal weight 1000. Equal weight 1000 is the Russell 1000 equal weight, which means that S&P 500 plus the another 500 stocks, total 1000 stocks, we are still above the 200 days moving average over here. So all in all, okay, I think personally, to put things in context, I think we are still pretty okay. We are still pretty okay. Okay, we are still generally the the equal weight stocks. I think that we are still in a bull market, at least from my perspective. Okay, you might think that no, Alex, you are wrong. We are still in a bear market. This is a bear market rally and such. Okay, perfectly fine. But for me, I think at least I think we are still in a bull market. Okay, and plus the previous Facebook Live, I talk about the market breadth, I talk about the market internals, etc., the AD line, the VVIX ratio, and the cumulative, the net high minus net low. Okay, I won't go through that today. I won't go through that again. But okay, Ken, this is my perspective. I think we are still okay. If I think if you understand what I'm trying to say, just type okay in the comments. Type okay in the comments. All right. So again, all right, to put things in perspective, is this still a normal pullback? Right? Even though today the S&P 500 is below the 200 days moving average and the Nasdaq. Okay. So to put things in perspective, this is the Nasdaq. No, this is S&P 500 futures. All right. So since the start of the year or even late last year, you need to understand that. Okay, you need to understand that the market has in fact rallied a lot. Okay, so in terms of absolute percentage, okay, so from the low to the high, okay, we are up we are up 10% from late December. Okay, so right now we are giving up about half, 5% more. So using the Fibonacci as an example, okay, generally I don't use Fibonacci lah, but to illustrate better, I'm using Fibonacci to give you a context, different perspective. So this was the rally over here. So it went up quite a bit. So pullback here, I still think, personally, I still think it is still pretty normal. It is still normal for now. For now, I will share with you when will it be not normal, and then I'll be more bearish. Okay, so I think for now it's still normal. So from the Fibonacci, from the low to the peak over here, okay. So right now we are hitting the 61% Fibonacci, which is still normal for a pullback. 38%, 50%, 61%, I think still normal, okay, we are still normal. Okay, so for the Nasdaq, okay, even up, even better, okay, quite a very good performance from the tech stocks, okay. So again, adding the Fibonacci level from the low, okay, to the high over here, we still didn't retrace 50% yet. Okay, we are still less than 50%, so we are still at near the 38% to 50% in between. Okay, we are, I think, still okay. The Russell 2000, the small cap, once again, we also rally quite a bit. Okay, so this is a pullback round. So the pullback based on the feed, okay, from the low to the top, okay, we are only now approaching the 50% retracement, 50% retracement. So to me right now, to put things into context, perspective, this is still a normal pullback to me. Of course, when the market dive down very drastically like today, it will make a lot of people a bit worried or scared. Okay, as in, just let me know. Okay, to be frank. Okay, are you guys a little bit worried or not? Are you guys worried? And if you're worried, just type worried lah. Okay, just type worried or W. Just type W in the comments if you are like unsure whether, am I wrong? Is this a bear market coming? I'm a little bit worried because market today crashed down a lot. Okay, just type W. Okay, if you are still very confident, okay, just type C on the market is fine. Market is fine. Okay, in fact I'm shorting a lot more. I am doing very well. Just type C in the comments. If you are confident, just type C in the comments. Okay, I will see a bit more worried or confident. HS is confident, Bami is confident, Wilson is very worried. Okay, so I think this is normal because when market really dive down a lot, if you are newbie or you're just starting out, you don't have the context, you tend to be a little bit worried, especially you have several long position, and most likely, okay, they should be stopped out by now and hit your stop loss. You lose quite a number of position. Okay, you get a hit. Okay, or your equities come down a little bit. You have some drawdown, then you're a little bit worried. Okay, so for me, I'm not so worried. First of all, I mentioned last week, okay, I'm pretty light. I have 2 position only, and as I mentioned last week, right? So as I mentioned last week, okay, nothing new over here. Can go back to my last week. I say that February historically was a weakest month. So not surprisingly, if market do come down, so that was also why I posted in the Telegram channel as well. I say that February is a weak month historically, so don't be surprised if we are seeing more downside. So I'm really kind of prepared, but I'm also anticipating a short-term bounce within the next few trading days. Obviously, okay, this doesn't materialize. I'm wrong in this aspect. Okay, I'm wrong. So this is correct. Okay, we are seeing more downside historically, but in a way that I'm actually expecting a short-term bounce, then market come down again. But the market didn't really have a short bounce. The bounce was actually very little. Okay, the bounce was actually very little. Okay, the bounce will actually come down, bounce a little bit. Okay, this green bar over here, this green bar, and then come back down again. Okay, and back to my Twitter. Okay, so back to my Twitter. So I mentioned, right, it's at a pivot point. Price maybe could do a rebound. That kind. I was expecting price to do a rebound. So in fact, there was one gentleman who asked me. Okay, let me go to the comments over here. Okay, so was yesterday a wash and rinse setup by Jack? So okay, see, I mentioned that yes for S&P, but you see but I don't like this pin bar or hammer candlestick formation. Okay, this was actually I tweeted this actually 14 hours ago. Actually, I think yeah, this morning only. So I don't like this pin bar. So the reason is, okay, this pin bar over here, all right, this is the pin bar that I mentioned, or hammer candlestick pattern. You see, okay, when a newbie, all right, see a hammer candlestick pattern, okay, what do they do? Especially a 200 days moving average, they see a pin bar, okay, pin bar, hammer stick candlestick pattern. Is it a bullish or bearish candlestick pattern? Okay, let me know. Is it bull or bear candlestick? Bull, just type bull. Bear, just type bear in the comments. Okay. Should I say, in my opinion, the market is bearish now? When the market is up, it is usually less than 1%. The market is down, it usually drop below 2%. Okay, understand? So understand what I'm trying to say. So yeah, your opinion, that's perfectly fine. That's perfectly fine. Okay, nobody knows until maybe two or 3 weeks later. So we shall see how it goes. Okay. All right. Thank you for your comments, Chunlai. So I really appreciate that. Okay. Then bullish, right? Yeah. So yeah, see, all I say bull, right? So I think this is a suckers bullish candle. It faked a lot of people, at least for the futures market, to go up. Okay. Ivan said it is not a good hammer, more like spinning top. Okay, be it spinning top or hammer doesn't matter. Okay, the key thing is, okay, there was a rejection. There was a long shadow, and this long shadow will induce people to actually go long. Oh, market actually reverse, that kind of thing. So I'm very sure there'll be people who go long now. For this is a suckers rally, okay? And then yes, like Wei Lun said, they will trap out, then come down again, So that's the reason why I say I don't like this camel or candlestick pattern formation. So once again, right now, we have about 250 people in the room, combining from YouTube and Facebook as well. So, see, I post some of my sharing on Twitter. So please register, not register, please follow me on Twitter as well. So I posted my Twitter link over here, twitter.com/Alex_yo. So CA is asking, right, Alex, if you don't like the pin bar pattern, what other pattern you would like to see instead? Okay, generally, I don't usually look at candlestick pattern. Okay, so I look at setup and trigger. So as I mentioned, like wash and rinse pattern, I like it. But when it is a wash and rinse pattern with a hammer, I don't like it. So as a rule of thumb, whenever I see a hammer candlestick pattern, okay, I skip. Okay, I'll be more skeptical. I will skip the setup, or I'll be more skeptical. Okay, this is my personal preference. I'll be skeptical. SKEP. I'll be more skeptical. Okay, so this is my personal preference. So where did I stop? Okay, so this is, to me, it is in context still a normal pullback to me. Okay, so let's look at the market breadth right now. So I'm going to give you a broad overall picture. What is the market actually doing? Okay, instead of just focusing on the S&P 500 itself. So let's go to market breadth. Okay, market breadth, it is actually, I'll just go to the directly over here. market breadth. I'll go to line chart over here. I remove the, okay. So this is the S&P 500, the percentage of the S&P stocks above the 50 days moving average, right? Market breadth to see how the S&P is doing. So previously, can you see over here when the market breadth is at a high, okay, at a high, market tend to revert back to the mean over here, okay. So this was in November, but towards the start of the year, market breadth climb up over here to somewhere around 70 to 80 area, okay. It is actually not the highest, but at an elevated level really. So which means that a lot of the stocks are actually participating. They're above the 50 days moving average. So right now, okay, it is coming down again. Okay, coming down again. So at about the 50% point. So only 50% of the S&P 500 stocks are above the 50 days moving average, which means that there are only about 250 stocks above 50 days. So as a rule of thumb, people, whether investors or traders, they do at the 50 days moving average as a midterm kind of trend. Below the 50 days is a downtrend midterm, or above 50 days is uptrend midterm. Okay, midterm now, maybe about a few months time, a midterm, okay, as a rule of thumb. All right, so the Nasdaq above the 50 days moving average, right? We are also coming down. Okay, we are coming down, so at about 60. So to me personally, this is actually a good pullback to me. Right? A good pullback to me. So MMFI is another one. The percentage of stocks above the moving average. MMFI, okay, if I'm not mistaken, it calculates into the whole market, not just the S&P. So this is MMFI. You can key into your trading view, MMFI, whole market. Okay, we are also pulling back over here. So yeah, MMFI, can you see that a lot of stocks are participating over here? This is the high level over here. Okay, so now it is actually having a pullback. Now it's about 60%. Okay, yeah. Tim is asking 50 days, yes. Percentage of stocks above the 50-day moving average. So if you understand what I'm trying to say for this, okay, I think I mentioned before, but maybe it has been quite a while since I talked about the MMFI. So if you understand what I'm trying to say, just type MMFI in the comments. You can keep on your trading view to see the market breadth, MMFI. All right, MMFI ma. Let me take a break first. So yeah, I think this is a good pullback to me. Okay. All right, so I hope for those who are only joined us recently in my Facebook Live or Trading View or Market Insight Virtual Summit, right? This MMFI might be new to you, okay? Just a quick show of hand, okay? How many of you, as in, know that this MMFI is new to you? If it is new to you, just type new in the comments so that I have a gauge, right? How many are actually new people in my Facebook Live, huh? Okay, if this is new, just type new in the comments. Oh, CA, is this new to you? I thought you are quite lao jiao with MarketWise Asia already. So okay, so you can just Google, okay, market breadth, percentage of stocks above certain moving average. Okay, MFI, you should know. Okay, I'm going to go through that. Because now we are into the 41 minutes already. Okay. All right, so volume profile. So is something that I'm looking at as well. So the volume profile over here, let me go through this. Okay, volume profile, basically I am incorporating into volume, just that I don't look at the volume over here. This is volume, okay, through time. Volume through time. You see along the way, March, May, June, July, September, November, you see average daily, they'll tell you the volume, right? Okay, volume through time. But volume profile, I'm looking at volume through price. Volume profile, also price profile, okay, volume through price. So I'm to see at which price is that the highest volume transacted. So in fact, looking at, okay, the volume profile from the swing low in October to the swing high over here recently. Okay, this is S&P 500 over here. So can you see that? Can you see that? The market a lot of actually transacted at about 4,000 level. So this was the point of control. This blue line over here is actually the point of control, POC, the highest volume transacted, okay, through this range over here from October to the high over here in early February. Okay, so this is the point of control. It's somewhere around 4,000 level. Okay, so that's the reason why yesterday you see that, when price hit the 4,000 level, okay, there's a short rebound, but today get flushed down again. All right. So another high volume area, that can see over here, right? It is somewhere around this bar over here, but not really significant. So from here to here, there's a lot of gap over here. Okay, price might or might not come down to this level. So it's still quite a long way to go. Okay, but anyway, not that important. Just want to share with you that 4,000 level was actually a pretty high volume area transacted, but it didn't hold. So price it is down. It is down. Okay, all right. So for the Nasdaq, I'll remove over here. So from Nasdaq, the low level, it is actually here. The October swing low. Okay. All right. So we are also hitting right now at a high volume node over here. The point of control is two way below already. Not important for us. But can you see this shaded line over here? The peak, the peak, okay, the mountain peak. Can you see the mountain peak over here? There's a lot of volume transacted. Okay, which is we are actually hitting this level over here. Okay, can you see that we actually hit this level, hit this level, okay, for today, hitting this level, which is at about 11920 for the Nasdaq futures. Can, all right, for the small cap wise, I'll remove that. Okay. This is also a high volume node over here. Can you see this peak over here? High volume node over here. Okay, so today, all right, we also somewhere around there, we also actually hit this level over here. So market, it is at a important level today. Okay, all right. Personally, somehow I feel that today, at the end of the day, the market might close higher, reverse. Okay, maybe not at maybe not turn positive lah. Okay, maybe, but there could be a shadow over here. My personal gut feel lah. Okay, which means that today the market come down over here. Okay, but towards the end of the day, market might go up like that. Okay, so there'll be some shadow over here. This is just my personal point of view. Timmy say yes, can use for individual stocks. Can use for individual stocks. Can So right now we are hitting at an inflection point where at crucial support level okay, based on volume profile. All right, Ken. So if you understand what I'm trying to say, just type VP in the comments. Okay, do engage with me. Give me a like, share, or comments. So I can see that my like on the Facebook and also on YouTube. YouTube, I cannot see the like. I didn't really go to YouTube now, but the Facebook total, I think 45 only. So give me a like, share, or comments if you learn something new, you like my sharing, etc. So just give me a like, share, or comments. I really appreciate that. Okay. Or if you think that my content give you value, right? Just share with your friends to let them know that there's this Alex, this gentleman there, always doing a Facebook Live every Friday to give you market outlook, market updates, content education, etc. Can? Now comes the important point over here. The star signal, okay, is there a star signal over here? So for those who are with me for some time, okay, I have this star signal thing, okay. Don't ask me what is it, how do I get it? Okay, this is proprietary. I don't want to share it publicly. Generally, it tells you the reversal point. I take into different context of certain things also, okay. All right, so the S&P 500, okay, still don't have the star signal yet. Okay, basically indices do not have the star signal yet. But okay, what I'm going to share with you is that the VVIX over VIX ratio, okay, do have a star signal. Okay, do have a star signal. All right. Most likely, okay, next Monday, okay, should have a star signal next Monday. Okay, right now, still don't have. A good chance that next Monday should have a star signal. So for those who are asking, for those who are new, what is your star signal? Well, basically a reversal, okay? Basically, this VVIX ratio, VVIX, okay, over VIX ratio is like the market internals, okay? All right. For those who don't know what is VVIX, that doesn't matter, not important, okay? I don't have the time to go through to that. Okay, basically it's a market internals, okay, to tell the market health. Basically, it moves in tandem, okay? Market go up, VVIX go up, market go down, and VVIX go down also, all right? So, next Monday should have a star signal and potentially, okay, it could be going up, okay? And the previous one for the VVIX, right, I think pretty June, okay, pretty accurate. Of course, not 100% accurate, okay, but I think the accuracy is not too bad. So previously is in the late December over here or early December. Yeah, late December there was a VVIX, there was a star signal. Okay, it goes up, market goes up. Okay, over here in October, market bottom over here, got a star signal. Okay, go up. Okay, in August, okay, it actually just some rebound. Nevertheless, there's still some rebound. Okay, maybe I will add the S&P 500 to give you some perspective. Over here, okay. So can you see over here, somewhere around here, the market actually go up. So below is S&P 500. So from here, bottom VVIX, okay, at the bottom, so it goes up also. And over somewhere around here, bottom, market, not the most accurate, but some ping pong, okay. But yeah, basically to tell you the past VVIX ratio over here. So there are some other parts, okay. Basically, I'm just telling you that it is not too bad, okay. The reversal signal is not too bad. So, so next Monday it is actually 27, okay, 27. There should be a star signal over here, 27 Feb, okay. All right. If you understand what I'm trying to say, just type 27. 27. Let me take a break. Let me see. Kevin is asking whether Google, there's a star signal for Google. Wow, you are asking me a good question. Let me see. Kelvin. Sorry. Okay. Kelvin. So Google, there's no star signal. There's no star signal. But again, Kelvin, no star signal. That doesn't mean that Google will not go up. Okay. As a whole, okay, this VVIX is a general market. Okay, because of VVIX over VIX is based on the S&P 500. Can? Okay. All right. So excited or not? In fact, I am looking to go long. So I'm looking to go long next week. So looking for setup. Okay. In fact, I am not scared. In fact, I'm looking for bullish setup. Again, you need a screener to screen out what stock to buy or what ETF to buy or what sector or industry to buy. So this one, I cannot help you. Okay. You need to have your own screening method and such to find your own setup. But generally, as a whole, I think the market could be turning higher next week, okay, based on the star signal that I have. Another signal, okay, it is actually the VIX, okay, the VIX. Okay, the VIX basically, the star signal, it is actually more for the bottom, as in the reversal lah. For VIX, okay, the VIX, of course, it is inversely correlated with the market, right? So if the VIX spike up, which means that the market will come down, the market will come down. So the VIX spike up, the VIX, the market come down, the VIX spike up, the market come down, the VIX spike up, the market come down. Okay, so this is the star signal for the VIX. Okay, so for the star signal for the reversal, not so much of signal. Okay, the previous time it has was, you know, here in August. So there was a reversal signal. Price actually, as in the VIX came down. Okay, which means the market will have a reversal. Okay, which means that the market will come down. The market will come down also. Okay, the market. The market will go up. The market will go up. When the VIX go down, the market will go up, even though it is just a short rebound over here. Okay, so the VIX, the signal, the star signal, not yet. Okay, but most likely early next week. I can't really tell the time, but most likely early next week, there should be a star signal over here, reversal star signal, which means that if the VIX has a potential star signal over here at the top, which means the VIX will come down. Okay, if the VIX come down, which means the market has a potential to go up. Can understand what I'm trying to say or not? Okay. So previously, the star signal for at the top for VIX is over here and over here. Also, pretty accurate. So again, the star signal for VIX, not yet, but I think early next week should have a star signal. So if you understand what I'm trying to say on the VIX, just type VIX in the comments. Okay. So my view is that, okay, I am quite light on equities, but tonight and early next week, okay, I'm looking to buy. I am looking to buy early next week. Okay, I'm looking to buy next week. But of course, I have to see the setup and the price action as well. Okay? So I'm not scared. I'm not scared. So in fact, when people are scared, I think, you know, it's a good time to look in the market. Be contrarian, okay? Be contrarian, because a lot of people are scared. In fact, a lot of the Twitter, a lot of people are bearish also. Some of the gurus are also quite bearish, okay? And of course, the permanent bears 越来越大声了. Okay, they are getting louder. Oh, I told you this is a bear market rally. Okay, of course, I need to do a disclaimer first. Okay, I could be wrong. So please do your own due diligence. Okay, I'm looking to buy, but I could be wrong. So even if you want to buy, you still need to look at the setup. Okay, so cannot anyhow buy. You still need to look at the setup. So I'm looking to buy. Quite excited. I will see tonight how it goes. Okay, so let's look at the market right now. The market, okay, still pretty bearish, but I'm looking for buy signal early next week. And then let's take a look at the everything okay so far or not? Everything okay so far? Okay, if everything is okay so far, just type good in the comments. Just type good. Everything okay so far on the US market as a whole. So I talk about the indices, the equal weight. I talk about my own trade. Okay, FBMT and the VITL. These are the only two equities, the two stocks that I own last week and until today. FBMT, I'm out. I'm still holding VITL. How is VITL doing now? VITL, not too bad. VITL, while the market is down, it is still up. Not too bad. Okay, not too bad. So, okay, is this a normal pullback? Okay, I let you guys see things in context. Okay, after the market went up quite a bit. Okay, so I still feel that this is still a normal pullback. Okay, we are still this is a low. We are still at a higher low ever. Still at a higher low. Okay, market breadth not at a high. Volume profile, we are at important support. Oh, by the way, I just want to let you know. Okay, when will I turn actually bearish? In case you think that Alex is a permanent bull, I'm not a permanent bull. Okay, I will wait for the price action. Okay, to tell me how the market is going to react. Okay, so add in my usual cloud and CPR over here. Okay. All right, so you can see the S&P 500. This is the monthly CPR. All right, so we are at the cloud support and at the lower range of the CPR over here. We are at a support. Can you guys see or not? Can you guys see this is the S&P 500 futures? We are at the support. Okay. If I add in the yearly pivot, which is the black dotted line, okay. All right, we are also at a bottom range of the yearly pivot. So this is a very strong support today. Okay, that's why I say towards the end of the day, Friday today, I suspect my gut feel is that there will be a long shadow. There will be a long shadow. Okay, the market will not be at a low level. It might not be positive green, but at a higher level. Okay, this is my gut feel. We will see how it goes. Let's see on Monday, or at least market close today, then you judge me whether I'm correct. I could be wrong now. Then you judge me, okay? All right. And of course, in my usual thing over here, okay. All right. So if the market, all right, break below next week, okay, break below this, okay, below the CPR and below the support level, then okay, I'll be more bearish. Okay, can? All right, if market break below, if price fall below this level, if price fall below the 3950 level, okay, then I will turn more bearish. Okay, less bullish lah. Okay, less bullish. I wouldn't say bearish, less bullish. I'll be more careful. I'll be more careful. And then of course, unless okay, price when we test the low over here and break below the low over here, then I will be a little bit uncertain. We might be, the market is more bearish than I thought. Okay, Ken? Like what Tim Lee say, yeah, it's a fine line. Okay, I am not a permanent bull. Okay, I will turn bearish. Just that, not yet. Okay, price need to close at certain level. Okay, I'm just looking at the S&P 500. Close below 3950. Okay, then I will be more bearish or less bullish. Okay, Can? All right. So this is my stand. Need to close below the low over here lah. This low today. Okay, Can? Everything okay? All right. Just type 3950 Okay, 3950 in the comment. Then I'll be bearish. My personal view. All right. So let's go to the team is asking, right? The Hong Kong market. Okay, go through the Hong Kong market is not my main market lah, so I can still go through, but I don't really have a lot of skin in the game, even though I have a BABA position. Okay, this is a long lips options call, but yeah, I'm still coding well. Okay, but I'm not sure how many have read the news on this. Okay, the Chinese government inject a lot of new liquidity into the Chinese market. So this is the news data over here. So see asking, right, is your star signal will appear in a future date? It don't really appear in a future date, okay? But based on what I see, there could be, okay? Yeah, from the current price action. So I'm anticipating there is a star signal. It doesn't tell you way ahead. It is not a time cycle or time analysis. Okay, it is still based on price. It's not a timing cycle, not a forecast. Okay, Ken? All right. So China ramp up the economic support with record cash injection. But obviously, the market is not showing the sign of liquidity yet, because if you look at the Hang Seng market, HSI, okay, it is still down. Okay, it is still down. Okay, for the past, since the start of January, it has been down already. Down for how many? Since the start, okay, for 1.5 months already, it's down. Is it? Yeah. No, so sorry. Since the start of February, it is down all the way 1 month. So at the end of the day, I know some people might be scared. Is this still a bull market or not? Okay. Again, from what you see, do you think this is still a bull market or a bear market? Okay, or a start of a new bull market? Okay, or it's still a bear market really? All right. What do you think right now? To put things in context, so this is the Hang Seng Index. Okay, it was down all the way. Okay, and right now, since November last year, it started to rebound. Okay, so right now at this point in time, do you think it is still a correction, a bull market, still a correction, or is it a bear market? Okay, what's your opinion? All right, Hong Kong is a rigged market, Ivan Ho said. In fact, I feel that all markets are rigged. All markets are rigged. Okay, you trade S&P, you trade stocks, they are all rigged one. Okay, the institution, the market makers, they are always faking you out. It is always rigged one. It is how you can counteract them, how you trade in a different way. Okay, you don't trade like what most people are trading. In fact, Hang Seng is more volatile. It's more volatile than the SPX, I would say. It's more volatile. That's my personal opinion. All right. Okay. So bull with correction, people say bull with correction. That's my personal view as well. Okay. Personally, all right. Mark is saying bull market correction. Yes, that's my personal view. I could be wrong. In my context is that we are still in a bull market. New bull market. We are still in a new bull market. We are right now here, it is still a correction. We are still in correction. Okay. No change since many weeks ago. I said that price above the central pivot range for 2 consecutive months. We are in a bull market. Okay, we are in a bull market. Okay. Last week I mentioned, right? As long as, even though price is below the CPR, even if it go and hit the S1 support area, we are still in a bull market. We are still in a bull market. So price can come down a lot more lower. Okay, come down here. Okay, I think we are still in a bull market, even though I think that if price break below the S1 level, I think not so good. Okay, but we are still in a bull market. So the S1 level, it is at about 9,900. Okay, 9,900. About that. The exact number is 19860. Okay, but to put things in perspective, okay, 19,900 round number. Okay, even if price can come down to 19,900, we are still in a bull market. Okay, can understand what I'm trying to say or not? The Hang Seng market can go down some more. We are still in a bull market. Can? All right. Again, it is the timing of when to buy. So if price can really come down to this level, 19,860 level, then I think it's a good level to look for potential long now. Okay. All right. So this is my personal opinion. But again, we still have to look at the market, the price action of individual stocks as well. Can? All right. Inverse pin. Sure, got people short. Okay. Can. Yeah. All right. Wooden is also expert trader. Okay, so he's also on Twitter. All right, so Ivan is asking which is a better pivot point, Fibo, traditional, or Camarilla? I am using the standard pivot point, traditional one. Standard, I think it's standard. Is it standard? Okay, let me go through. Pivot point, it is Camarilla and traditional. Okay, I'm using these two, Camarilla and traditional, these two. All right, so I don't show you the Camarilla because there's too many lines. I don't want to confuse you, so I just use the standard pivot points. Can? All right, so I think that is about all for today. Any question? I can handle a few questions before we end it a day. All right, I hope you guys I hope you guys are okay today. I hope I can make you less stressed, make you less worried. Okay, stable you guys. Okay, don't be afraid of the market correction. Okay, of course you can be bearish lah. You want to short, I mean, go ahead. I am okay with different views. But for me, I am looking to buy next week. I'm going to buy this next week. Okay, because of the potential reversal based on the VVIX and also on the VIX. Okay, VVIX potentially showing a reversal next week. Okay, so that's potential. All right, and VVIX and the VIX next early, not Monday, but early next week could be coming down. Okay, which means that the stock market will be going up potentially. So I hope you guys can be mai kanchong, okay, mai kanchong so be stable, okay, don't be so stressed. I'm looking to buy next week. Can? All right, I know. I think Twitter, a lot of people are bearish, but I still bullish. I'm still bullish. I could be wrong. Don't copy me. I'm still bullish. Okay. Yeah. All right. Any question? Any question? Emma is asking, do you think Chinese stock weeks like BABA, KWEB will rebound next week? Okay, KWEB. Basically, KWEB is very similar to the Hang Seng now. So again, we are at the support area already. We're at the support area. So we shall see how it goes. So let me see for KWEB. KWEB. Let me see. KWEB. Okay. In fact, for KWEB, there is a star signal over here. Okay, there's a star signal over here. All right, for KWEB. So market, it is oversold. So if next week, market reverse back up like that, okay, then that will be a very good entry to go long. You get what I'm trying to say? So which means that this was the gap down, right, for KWEB. Okay, so this is the gap down over here. If price can reverse back up again and close above this line over here, then this will be a very good entry signal. And again, have to see whether there's a wash and rinse pattern and such. Okay, this is my personal view on the KWEB. All right, this is KWEB, not HSI, KWEB. This is a CSI China Internet. So there is a star signal. It is a few days ago, 2 days ago. Okay, Oh yeah, which sectors to look out for? Okay, so back to my seasonality sectors. Oh, not here. So for March, in fact, for March, based on the market cycles by Larry Williams, based on the seasonality, okay, the market could turn. I'm looking at tech. Basically, I'm looking at tech. Tech is pretty good in March also. Looking at tech, because right now tech is the stronger one. Okay, tech is the stronger one. Okay, to let you know. Let me see. Okay, let me see. Give me a moment. Let me check something. I can't find now. Yeah, okay, SPY. Okay, SPY 8 to 27. Okay, just to let you know the seasonals. SESONL seasonals. Okay, SPY from 8th of March, okay, to to 27th of April. Okay, 7th of April. All right. Out of the past 17 years, okay, 94% of the time, it is positive. All right. Okay. Can. So yeah, seasonal wise, early March, there should be some rebound, even though the rebound could start as early as next week, because right now we are already near the end of February already. End of February already, we are going to heading into March really soon. Okay, so I'm looking at that. All right, Ken. So this is something to look out for. Technology pretty similar also. Let me find the tech. Okay, technology, same also. Technology, pretty much to S&P as well. So March to April, okay, it's a good period. All right, Ken. Mark is asking, what is your take on crude oil? Crude oil. I know it is up today, but let me take a look. Crude oil, it is a bit choppy lah. Crude oil. Okay, I didn't really trade crude oil, so not an easy market to trade because recently ping pong all the way, in a range. But generally, crude oil, no change. It is still in a downtrend. Price is below the cloud, below the CPR, so it is still in a downtrend, but difficult to trade. Difficult to trade crude oil. I'm not touching crude oil. Okay, 3 consecutive, good, maybe a good stock for price reversal. So tonight, I know there are some candlestick pattern, okay, three candlestick pattern, that kind of thing. So I don't usually look at that. All right. But of course, whenever something that's down for 3 consecutive days, there's a higher chance for price to reverse back up. Okay. And it is quite foolish to short if price is down for 3 consecutive days. It doesn't mean that price cannot go down, but you are shorting late. The price could reverse anytime. Okay, Ken? Yeah, so thanks for your comments on tonight. So I hope you guys I'm giving you good value today. So if you learn something new, you like my sharing today, all right, just type value in the comments. Just type value in the comments. Okay. Ken, I hope you guys enjoy my session tonight. I think the core thing is that I hope I can, calm you down tonight. My kanchong, don't be nervous. I think the market is still okay. But of course, I could be wrong. I could be wrong. All right, I could be wrong. Okay. Recap. I'm looking at tonight, Friday, and early next week to buy. Ken? All right. So I think that's all for today. 1 hour, 15 minutes. 12:45. I hope you guys learn something new today, provided value to you. So once again, wow, we are so near. We are into March already. Okay, so very fast. Oh, by the way, next Friday I won't be doing Facebook Live. I won't be doing Facebook Live next Friday because I have some family, gathering. So don't think I'll be in time to do my Facebook Live. So next Friday, no Facebook Live. Okay, Ken? All right, so thank you so much for your time today. So I really appreciate, for staying with me until 12:45 a.m. in the morning. So with that, I shall see you guys 2 weeks later, okay? Or maybe a YouTube post next week. So thank you so much. Have a good, safe trading week, okay? Next week. I'll be looking to buy next week. Thank you. Bye-bye.